Hi, Rod Driver. Welcome back to 10 by 6.
Hi, thanks for having me on again.
No, our pleasure. This week, we're looking at the international finance system for the first part of the show, and then we're going to link that in specifically to the 2008 economic collapse, which you will talk us through. So over to you.
Yeah, thanks for that introduction. So I find the banking system a fascinating issue to research and think about, because we discovered in 2007, 2008, when there was a global financial crisis, just how corrupt, unethical, and downright criminal the whole system is. So I'm going to begin by talking about that crisis and what it taught us about the banks. And then we're going to kind of broaden it out and look at the other issues in banking, both internationally, but it also applies to what goes on here in Britain and so on. And particularly, it looks at the role of British banks internationally, because they have a very negative role. So if we just sort of begin with a little bit of context prior to 2007, when the crisis began. So at that point, it was estimated that just under half of American corporate profits were being made in banking. And I don't have an exact figure for the UK, but again, immense profits were being made in the banking sector. And this had come about beginning in a period back in the 1980s, when Britain, America, and many other countries decided they were going to do what some people would call light touch regulation. So they really were not regulating the banks seriously. And so the banks were able to do more and more unethical things. And over time, that became unsustainable. And in 2007, the whole system just collapsed. So there were certain specific things that were going on in the first few years of this century. So some of you will have heard of the idea of a subprime mortgage, where a bank can lend money to people that they really shouldn't be lending money to. They're people that really have very little chance of paying back the money. And so this was all based on filling in forms with lies about people's ability to pay back their mortgages. Now, if a bank did that and then the mortgage sort of stayed on its own books, eventually the bank would go out of business. But the banks very cleverly realized that they don't have to keep a mortgage on their own books. They can pass the risk on to somebody else. And they used a term, I'll use the word securitization. Now, don't worry about the details of that. It can get quite complicated. But the basic principle is you put all the mortgages in a big pot, chop them up, and sell them on as investments to other people. And so the banks created these securities, and then they lied about how safe they were and said, hey, these are great investments. And they sold them to their clients, and their clients invested in them, trusting the advice of the banks. But then eventually the mortgages were not repaid, and these investments became worthless. And many people participated in the deception. So there's a group of people who are called credit ratings agencies, and their job is to look at investments and make an assessment of whether they're risky or safe. Well, the credit ratings agencies said that these securities based upon mortgages were completely safe. Of course, that was not true. They're incredibly risky investments. And then Goldman Sachs in particular, but a number of other banks as well, made money one additional way, which is they knew these mortgages would not be paid back. They knew the people who'd invested in these securities would lose money. So they actually created another way to bet against their own clients. So in fact, they made money 3 times over. They made money when they arranged the mortgages, they made money when they sold them on a security, and they made money again when they bet against their own clients. And this whole system was deliberately kept incredibly opaque. Even the people who created the investment securities had no real idea of what they contained and how risky they were. So the whole point was to hide the danger of these investments with complexity. And eventually, when the mortgages couldn't be repaid, there'd been a bubble in house prices that burst, prices plummeted. Many owners ended up in what's called negative equity, where the amount of their mortgage is worth more than the value of their property. Banks made huge losses, lots of businesses went bankrupt, Banks stopped lending, they stopped lending to each other. The whole financial system just got locked up, it ground to a halt. And the net result of this was that large numbers of properties were repossessed, people lost their jobs, businesses were unable to borrow. And so we had a sort of massive crisis in a number of countries, America, Britain, and many other places. So this was called the global financial crisis. Now, in the aftermath of that, there have been interviews with many people who work in the banking system, and they've admitted that they actually saw their clients as Muppets to be ripped off. So the word Muppets was their word. So they actually had this bizarre situation where banks, which should be these kind of bedrocks of stability and safety, actually they saw their role as ripping off customers. And various experts in America have said that all of the organizations that should have been regulating the banks, both in America and in Britain and elsewhere, were complicit in much of the frauds. They knew what was going on, but they chose not to do anything about it. And since that period, there have been huge numbers of investigations into criminal activities by banks. And so one or two people would have seen headlines about banks mis-selling things. So they'll sell a product that's completely unsuitable. They'll rig the markets by making fake orders. They've even been fined for their involvement with terrorists. They've been fined for huge amounts in relation to helping people evade tax and also for accounting fraud. So in fact, the financial companies are the most fined companies in the last 20 years. So in total, this is nearly all in America, but they've been fined $330 billion in 20 years for their unethical and criminal activities. And yet it doesn't seem to change the way they do business. You know, this is an astronomical amount of money. No other industry comes anywhere close to being fined this much. They are basically running a set of global interconnected frauds. And yet individuals are hardly ever prosecuted. And it turned out that these banks are so big that governments are afraid to let them collapse. So they use the expression too big to fail. And so banks poured enormous amounts of money into bailing them out when the crisis happened. So in America, the total amount is estimated to be approximately $7 trillion, an amount of money that is absolutely incomprehensible. But much of this money, although the governments claimed it was to stabilize the banks, it ended up working its way through the financial system and ended up increasing prices of things like stock markets and ended up making the richest people in the world much, much richer. And so there were various newspaper reports a few years ago saying that in the 5 years since the global financial crisis, the 1,000 richest people in the UK doubled their wealth, whilst at the same time, everybody else was suffering from austerity and decreases in government spending. So there's an amazing kind of double standard in how governments will provide financial support to the rich and the powerful, whilst not doing so in the same way to the rest of us. And what people have realized is that the banking system has inherent conflicts of interest, where they will benefit from doing something completely unethical, in this case, betting against their own clients and lying about their products and doing things that they shouldn't have been allowed to do in the first place. And part of the problem is that modern banks advise clients, but they also trade for themselves. And so when they're trading for themselves, they're often thinking about doing things that would harm their clients. And so there's an inherent set of conflicts of interests there. And in fact, if we go right back to 1929, some people will be aware that America suffered a Great Depression. Now, in fact, the Great Depression came about for many of the same reasons that prior to 1929, the financial companies had been allowed to do more and more rather dubious activities. And eventually, this collapsed the whole system. Now, interestingly enough, after the 1929 problems, the American government realized that an important part of the solution was to completely separate the gambling aspects of banks from the more basic aspects of banks, such as mortgages and savings. And they did this. They separated them out completely. And for about 50 years, we had quite stable banking systems. But in the 1980s, some people will remember the expression, the Big Bang. We had a complete transformation of the banking sector in Britain, and something similar happened in America, where legislation was introduced that allowed banks that were separate to be brought together. Just excuse me 1 second. And bringing these banks together and allowing a sort of free-for-all in the banking system has created a very dangerous, unstable system. And this reversal in the 1980s came about because banks had lobbied behind the scenes for banking to be deregulated. And that was, from their point of view, that lobbying was very successful. The rules were changed to benefit them, and it's been catastrophic for the rest of us. Just excuse me 1 second. I'm just going to interrupt for 1 minute. I just have to move my phone somewhere I can't be heard. So what a number of researchers have noticed is that the executives of many of the banks were actually paid massive bonuses, even when the whole banking system was failing and the banks were in danger of going bust, which rather sort of shows the idea that executives are paid in relation to their performance is not true. They're actually finding a way to rig the system. So they're paid massive bonuses irrespective of the damage that they cause. So the problem, in fact, has now got even bigger in a sense, in that some of the banks have now been allowed to merge and buy up other banks. And so this idea that banks were too big to fail in 2007, the biggest banks are now much bigger than they were. And so if any bank ever did get into difficulties, it would be very, very difficult to deal with it. And so the banks know that the government is always there to bail them out. And this encourages banks to take very, very big risks, which is not a good thing. So many researchers have said that actually banks have now got too big and too complex to regulate. Even to regulate one of the giant American banks would require so many thousands of regulators to be working on analyzing their activities on a continuous basis that it becomes impossible. So there are lots of people saying that the banks should be made smaller, we could break them up, we could separate the different activities that they do and make sure that the gambling side of things is kept completely separate, just as people did after the 1929 crisis in America. And various other commentators have pointed out that the way we treat banks is slightly odd. So the media will celebrate huge bank profits. But in fact, banks don't really do anything, if that makes sense. They're not making anything. They're not growing food. They're just finding out how to provide a source of funding to all the other activities that are genuinely productive in the economy. So if a banking system is working well, the profits in that system should be very small. They simply lubricate the economy. And in fact, an insider in the US government, very important insider from the past, Paul Volcker, actually made a speech where he pointed out that he felt that since the ATM machine, so the hole in the wall machine where you get your money, that he doesn't think there have been any innovations in banking that have been beneficial to society at all. So almost nothing in the last 40 to 50 years that banks have come up with has benefited society. It's actually about enabling the insiders in the system to work out how to extract more and more wealth from the system without creating anything. So if we open up and look a bit more broadly at different aspects of the system that are problematic, we'll begin with what most people think of as tax havens. So some researchers call these secrecy jurisdictions because their main goal is to provide secrecy, which helps with tax, but it also enables people to hide who owns what. Now, nobody knows with any certainty how much money is hidden in tax havens. It's estimated to be at least $20 trillion. This is an astonishing amount of money. Now, when people talk about tax havens, most people assume that we're talking about little islands or little countries like Panama and the Cayman Islands. But in fact, various researchers have pointed out that the three biggest tax havens in the world are actually Britain, America, and Switzerland. So they're advanced nations. And in fact, London is at the center of a global web of offshore tax havens where the money moves through London on its way to these offshore centers. And one researcher found that the four main English banks, so HSBC, Barclays, Lloyds, and RBS, own 1,600 subsidiaries in tax havens. And you've got to remember, many of these tax havens are very small. Their economies are very small. There's absolutely no genuine need for any of these banks to own vast numbers of subsidiaries in these countries. So all of these exist to help the rich and the powerful and big companies to manipulate their tax returns and to hide their wealth and to hide their ownership. And so a number of very good researchers on these subjects, and they've pointed out that corruption on the scale that we see internationally requires the collusion of the mainstream banks. So if British aerospace executives are paying a bribe of $7 billion to the Saudis to encourage them to buy weapons from British aerospace, then this requires the mainstream banks to go along with this bribery. And it also requires the accountancy sector to hide what's going on. And there's, in fact, one of the leading researchers, someone in the House of Lords, is a man named Prem Sikka. And he said that in his opinion, not only the banking system is not fit for purpose, but the whole accountancy profession is also not fit for purpose. And then as well as the sort of named banks that people will be familiar with, there's a whole swathe of private banks that nobody ever knows anything about. And the 10 biggest in the UK control approximately £4 trillion of wealth. Again, astronomical amounts of money. And the whole purpose of these banks, again, is to help the rich and the powerful hide their wealth and avoid taxes and manipulate their ownership of various things. Okay, so if we look at something that particularly affects the poorest countries, it's known as capital flight. And this is when rich people and dictators take their money out of a country, and often it's money that belongs to the country, and they stash it in private bank accounts in their own name. So what we actually see is money flowing from poor countries to rich. And various researchers have pointed out that this type of capital flight is the single biggest source of wealth transfer from poor countries to rich countries, with the total estimated, the net transfer of wealth from poor to rich being approximately $2 trillion a year. So most people think that, hey, doesn't Britain give a bit of aid? Doesn't the United States government give a bit of aid? Well, we do, but it's a tiny drop in the ocean compared to the amounts of money that we take from these countries. And there's an outstanding book written a few years ago by a man called James Henry, and his book was called The Blood Bankers. And he gives a few examples of this. So he pointed out that in 1979, in Nicaragua, 3/4 of the loans that were provided by international organizations and various advanced countries and big banks that went to the nation was immediately stolen by the wealthiest people in that country and stashed offshore. And in fact, in Nicaragua, inequality at the time, as still to this day, was particularly extreme. So one family owned approximately 1/4 of all the crop farming land. And he also talks about El Salvador, where 14 families control 90% of the land and the sort of the financial wealth. And many of them will attempt to take the wealth of the nation and put it in their personal bank accounts. And the American government and the British government quite actively support these processes. It would be quite easy for them to introduce stricter regulations to stop banks helping dictators and the wealthiest people in these other countries stealing from the country. But the British and American governments really don't want to crack down on that because they see this, the financial sector, as an important source of wealth for the richest people in their own country. So in Britain, it's estimated that approximately £16 billion a year should be paid, £16 billion a year more should be paid by the wealthy in the UK, but that's unpaid taxes. And you've got a similar situation in Greece, which many of you will know experienced quite severe austerity over the last few years. And various researchers pointed out that the main reason that the Greek government were having problems was because they were just unable to collect the taxes that were owed by rich people in their country, because it was all being hidden offshore. Now, if we look at corporate activities, some of you will be aware that big companies create incredibly complicated international structures. So multiple layers of holding companies and subsidiaries, and so on, many of them in tax havens. And they engage in what's called transfer pricing. So even though they might sell lots of petrol in the United Kingdom that they should pay tax on, they will manipulate their accounts and pretend that all of that profit was made in a tax haven which has a 0% tax rate and pay no tax. And so famously, Rupert Murdoch, who owns News International, he had, it was estimated, 800 offshore companies which were used to manipulate his taxes and keep them down to a very minimal level. So it's estimated that the total amount of tax lost each year worldwide adds up to hundreds of billions of pounds or dollars. And very interestingly, many people think that, oh, the system's so complicated, we can't possibly do anything about it. But there's a very good researcher in the UK called Richard Murphy, who's pointed out that actually a simple change to the accounting regulations would enable us to easily tax all of the big global companies. So often when people say, oh no, these problems are just too big, globalization's the problem, there's nothing we can do about it, it's rarely true. In general, solving these problems is actually much easier than people think. What is lacking is political will. And one of the things that's worth mentioning here is the idea of legalistic thinking. So a lot of people who talk about the law say the law is very black and white. There's the law. If it's on the wrong side of the law, it's illegal. If it's within the law, it's legal. But the problem with many of these complex tax arrangements is that none of them, or most of them, never get tested in court. And even insiders have admitted, probably if they were tested in court, the vast majority would be found to be illegal, but they get away with it because they're not tested. And you also have the problem that the corporate criminals and their lawyers are actually writing the laws. They're the ones who are pushing for deregulation, and they will draft a new set of laws where there is weaker regulation, and governments will simply enact those laws. So something that should be a crime becomes legal, although still clearly unethical in many cases, simply because the criminals are writing the law. So if we look at what I call the gambling side of the banking system, there's sort of two major areas. One is known as currency speculation, and the other is known as derivatives. Now, you don't worry about the technical details. I won't cover anything complex. And these two areas overlap. Now, with currency speculation, the idea is that money can move very, very quickly in and out of countries where speculators are buying large amounts of one currency and then selling it and buying another and so on. This has immense downsides for society in general. So very famously in 1997, we had a very large-scale Asian currency crisis. And it's estimated that in a very short space of time, about 24 million jobs were lost. And older viewers will remember that back in 1992, George Soros gambled, speculated against sterling, and the British government lost billions of pounds and so on. So this manipulation and this gambling can be very detrimental. And then if you look at derivatives, some people will be familiar with words like options or futures, and there's a whole range of complex financial instruments. Now, the strongest critics, such as Warren Buffett, who's a famous investor, has pointed out that he sees these as financial weapons of mass destruction, and they can create immense harm. And it's estimated that there are approximately $600 trillion of derivatives gambling each year. And the amount on currency speculation is estimated to be even higher at $2 quadrillion. Now, these numbers are so big that they are actually many, many times greater than the entire value of the world economy. So it seems weird that people can take gambles on this scale. And this gambling can affect the prices of oil and food and many other things. And so in 2007, there were food riots in poor countries because the speculators had manipulated the price of food, so it became more expensive, and poor people couldn't afford to buy food. Now, the famous economist John Maynard Keynes has pointed out that this type of gambling, if it's done on a small scale, might be fine. If it's like a bubble floating on the stream of the economy, then perhaps it's okay. It doesn't affect the stream. But if the gambling is on an enormous scale, it becomes like a whirlpool that completely distorts the flow of the stream. It completely wrecks the real economy. And so we need to be very careful about allowing gambling at all. But if we do allow it, we should ensure that it's a very, very small scale. So I want to mention briefly a couple of specific things that people talk about and might hear about if they're reading the press or watching mainstream news. So some people talk about the words shadow banking. So this is any banking activities that are not regulated in the same way as banks, that enables very, very sort of clever people with access to lots of money to do all sorts of slightly irregular things. So there's a number of different types. So if we look at, say, hedge funds, in 2020, there are 5 hedge fund managers who each earned $1 billion. That's their personal take-home pay for that year. And that's because they are managing vast amounts of wealth for other people. Now, there was a great book written a few years ago called Black Edge, where insiders pointed out that almost all hedge funds are using illegal means to make their wealth. So some of you will have heard the expression insider trading. This is where you have information that nobody else has access to. And older people again will remember the famous Michael Douglas film Wall Street, which was all about insider trading. Well, hedge funds are using insider trading all the time. So they're essentially criminal activities that are allowed because the regulators don't do enough to regulate them properly to get away with criminal activities to make money for the rich. And then if you look at other organizations, we've got vulture funds, which buy international debt very cheaply and then use the courts, the court system, to force governments to pay back all their debts. And this is having serious detrimental consequences for developing countries. And there's many other types of sort of shadow banking activity. And there's a strong case for saying probably all of them possibly should be shut down, but certainly they should be much more strictly regulated. And then the other thing that people might have heard about from reading the mainstream press is something called high frequency trading. Now, this is where instead of having traders make all the decisions, you get a computer to make all the decisions. Now, the thing about using computers is that they can make decisions unbelievably quickly, far, far faster than human beings. So they can make thousands of trades in the blink of an eye, quite literally. And what we're finding is that the banks are trying to find ways to get information just a few microseconds faster than everybody else. So they'll position their computers in a particular location near the trading exchanges. And they've even built microwave communication systems between one trading exchange, let's say New York, and Chicago, because microwave communications are a few microseconds faster than mainstream forms of communication. And so they get information that tiny bit before everybody else, and they can do trading based upon that. So it's actually a modern legalized form of insider trading. And because of the amount of trading they can do, then you've got a great deal of complexity. Nobody can really audit what's going on to find out what's happening. You've got a black box with a great deal going on inside it. And often computers from different companies interact with each other. And we had something a few years ago, which became known as the flash crash, where the interactions of multiple computers that were programmed to work in a certain way led to a giant crash in the markets, and then it instantly rebounded right back up. So incredibly hard to know what's really going on here. So a lot of the time, these organizations are gambling with huge amounts of other people's money, and they will keep the profits, but they will make sure that they offload the risks onto other people. But all of this is creating a lack of stability. But what we really need in a financial system is a safe, secure, stable system. But in fact, what we're creating is exactly the opposite of that, an incredibly unstable system that fluctuates all the time. And insiders have admitted that the main purpose of all of this financial engineering is to increase their rents. That's to increase the free lunch that they get, the amount of wealth they can extract from the system. It's basically just a giant license to commit fraud. And in fact, some people will be aware of the example that happened a year or two back, which is, some people called it the Robin Hood scam, where there were lots and lots of small traders who were using some free software. Well, they thought it was free because they didn't pay any money for it. But what they realized was the company was making its income by selling their trades onto bigger players. So if a small investor put a trade on their software saying, go and buy £100 of this stock, that then went to the big company before it went to the trading exchange. The big company saw this trade of £100 was coming. It put its own trades in advance on the main exchange before the small investors' trade took place. And so the big company was unable to make additional profit because it knew what was coming. So this is a cheating technique, an illegal technique actually known as front running. So you can see there are more and more complex ways to manipulate the system. So we've now created a system that really needs to be changed completely. Almost every aspect of the financial system needs to change. Now, most people are often afraid when I say things like, well, you have to change the whole system. But in fact, the whole financial system has changed completely in the past. So in 1944, we introduced all the Bretton Woods institutions, which now dominate international activity. In 1971, America came off the gold standard, which had immense ramifications for the whole world. We created the euro in 1986, where many domestic national currencies disappeared, as many European countries all decided to have the same currency and so on. So we can make big changes anytime we want to. And if we go back to the 1929 crisis, they completely separated the different activities of banking. And that is something that we should do as an absolutely key, necessary first step, to separate the gambling from the other activities of banking, which should be safe and secure. And then there's other things that people talk about sometimes. So some of you may have heard of the Tobin tax. Sometimes it's called a financial transactions tax. If you introduced just a very, very small tax on each transaction, that would cut the amount of high frequency trading right down to a tiny fraction of its current level. And so we'd end up with a much more stable system that would be easier to look at, to see what people had done, to make sure that crimes were not taking place, and so on. And we should start to rethink investment so that it's not this thing about investing for the short term and trying to make a profit every few seconds, but investment should be about safe, secure, long-term funding of the general sort of businesses of our society. Okay, I think that's probably quite a good place to stop and open it up for general discussion.
Brilliant. That was so thorough, Rod. Thank you so much. And I learned so much, condensing so much information into a small space, small time. And it was done in such a way that hopefully for many people it's accessible, which of course is what 10 by 6 is ultimately about, or supposed to be about. Before I go to the questions, can you just, I don't know if you're going to cover this in more detail in another session, but just talk about the 2008 crash in terms of how it's reflected in everything that you've just discussed in the last 40-50 minutes or whatever. Can you just talk us through why that happened?
Yeah, so it was a set of sort of interconnected things. So the main thing was about making lots of mortgages that should never really have been made. And firstly, that means those mortgages will never be repaid. And so somebody somewhere is going to lose out. But also, in parallel to that, loaning lots and lots of money to buy properties tends to push prices up. So more people are able to bid for the properties they want to buy. And so prices tend to go up and up and up. And eventually, people realize that prices have reached such a level that that's no longer sustainable without somebody lending even more astronomical amounts that should never have been lent in the first place. And so eventually, so you get a house price bubble, which eventually will burst. Eventually the prices will crash when everybody suddenly realizes they've got too high. And that was at the same time as the mortgages in the first place not being able to be repaid. And so the financial advisors had gone and spoken to lots of people who couldn't really afford to buy properties. And they said, hey, we've got this great new mortgage deal, and it starts at an incredibly low interest rate, and you're just the sort of person it's aimed at. And oh, don't read the small print that says the interest rate's going to increase. We'll remortgage in 6 months' time or a year's time. You'll be fine. Don't worry about that. So there are lots and lots of people, many of whom were duped into signing documents they shouldn't have signed. But if you're a person who wants to buy a property and a bank comes to you and says, hey, we've got loads of money and we're going to give it to you at really low interest rates and everything will be fine, most people are going to fall for that. So there would also have been a small number of people who would know exactly what's going on and would be happy to sort of take the money with the view that they could sell the property on very quickly and make profit. And so you'd have both of those activities at the same time happening. And then all of that's going on at the same time. The bank says, well, we know this isn't going to work out well. We've got to offload these mortgages from our books and sell them to anyone we can con into selling them. And so this is where they created these investment securities, which is basically where an investor buys the mortgage, and what it's hoping to get is the income from that mortgage year after year. But eventually that ceases to be paid, because these mortgages should never have been lent in the first place. So those investors are losing money. And so the whole thing, nobody can sell the securities to each other, because everybody realizes they're all worthless. Everybody realizes that they've got worthless investments. Yes. And then the house collapses. Lots of loans get called in. The investors realize they've lost all their money. And so the whole thing just kind of locks up, where nobody will lend to anybody else, because everybody's afraid of who's carrying what sort of risky debts. Everybody's afraid of which companies are going to go bust because they've got too many dodgy investments on their books and so on. So everybody loses confidence in the whole financial system, and it basically just implodes.
Again, a fabulous summary. Thank you so much. Can I just ask you, that the corporate media focused on two main culprits, and that was the ones that kept being pummeled at us at the time, which was Enron and the Lehman brothers. Can you just give us a little bit of an explanation of who they are and why they were being seen as being, the ones behind it?
So Enron is actually a completely different, vast fraud. And so we could talk about that another time. That was about manipulation of the California energy markets. And that just became an enormous set of frauds, again, completely separate, but it was about gambling on financial markets again. And then Lehman Brothers was, I'd have to go and research my notes to check the exact details, but it was one of the key players. There were a handful of key players who'd done lots of investments that they suddenly realized were worthless. And basically they went bankrupt. But in order to give you a proper discussion of which businesses were doing exactly what, I'd have to prepare a whole separate presentation.
Totally understand that. At the time, again, what was being reported was a number of these figures taking their own lives in the States and in Japan specifically, and probably other places too. They were taking their own lives because of how the world had now exposed them, or how they were being exposed to the world, or they were being exposed to their investors, etc. And yet what we didn't see, Rod, was international laws being used to round up hundreds, if not thousands, if not tens of thousands of people, and to stick them in prisons until their last breath. Can you just briefly explain to the viewers why that didn't happen? Because before you as well, because one of the things we did actually identify at the time again was the way in which Iceland tended to treat their culprits very, very differently to the rest of the world.
Yes. Well, so I'm always staggered that politicians in Britain and America and many other countries are basically so corrupt that they will do almost anything to protect the people who funded their election campaigns and so on. And you can really see this in America. The whole system is just sort of corrupt right through to the core. And so the basic principle is that prior to the crisis, senior figures in businesses were not considered to be personally responsible for what the companies had done. Now, this is something that I've always considered completely wrong. And so the theory is that it's so hard to trace the chain of events right back to individual senior board members and executives and so on. And these businesses are big and complex. And it turns out that nobody at the highest levels really understands the detail of what's going on in the sort of sense of day-to-day activities. That what tends to happen is the corporate entity is considered separate from the individual. And so the company is fined. And the fines can be enormous. We've talked about, billions and billions of dollars in fines for the banks. And so regulators and governments consider that to be the appropriate way to regulate big business. But as we see in the real world, it doesn't work. And so since the financial crisis, certainly in Britain, they've been attempting to introduce laws that do make individuals more responsible for the activities of their companies. Now, whether this will ever be implemented or actually used and anybody prosecuted, we have to wait and see. To my way of thinking, it's a little bit of a token gesture. And we need to have a much, much stronger system of saying that all of the senior people in any big organization are responsible for the wrongdoing of a business, because they actually sort of set the tone for the business. They decide whether or not it's okay for people to be bending the rules here and there, striving for more and more profit by doing things that are more and more unethical. Or they say, no, we want to have a proper ethical framework for all the activities our bank does, and we're going to make sure we train people all the way down to ensure that happens. And none of the biggest businesses are really doing that yet. The focus still is on profit at all costs, irrespective of the harms to society, simply because there are no really severe penalties that make a difference. So we'd have to change the whole system of sort of corporate governance, the whole system of how the law applies to executives and so on. And the powers that be, that the government, they're so in bed with big business these days that they're not very keen to do those changes.
I think also we have to remember that in terms of the way in which the corporate media works and the way in which it's now become ingrained within culture, in that we're now pummeled with advertising for betting. So basically, I think what it's doing in a way psychologically is conditioning certainly some people into this idea that life is eternally about risk. And therefore, it's effectively about putting 5, 10, 50 quid on a 3-to-1, so to speak, for a player to score or a team to win or whatever. And you become conditioned into that sense. And it's scary in the fact that then when you present this type of information to them, it's so what? Because that's the way in which they're living their lives. They're picking up their mobile phones, they're going onto the betting site, they're seeing what horses are running today or what teams are playing, and they're outlaying I don't know how much money in the process. Sometimes they win, sometimes they lose, but that becomes their culture, their identity, which is at a micro level, that's extremely scary.
Well, so I think it is. So I think you'd have to have some psychologists on the program to have a nice big discussion about that whole area. But I think the area of gambling and risk is quite interesting, in that when people are betting on the horses or any other sort of standard thing that individuals bet on, they're aware that they're taking the risks. When we're talking about the banks doing gambling, a lot of the time they're not carrying the risk. And that's what we kind of saw with the activities in the financial crisis, that they're using other people's money to take the gambles. often if those gambles are not successful, the banks themselves don't take the losses. The other people who've provided the money, they might take some losses. The government could end up taking the losses if things go really badly wrong, and that affects society on the whole. But if the gambles are successful, then the banks take a cut of the profits. And so this whole thing is that risk relative to the people who are making the gambles is sort of transferred elsewhere. And which is one of the reasons why a lot of people say governments should never bail out banks, because actually it just encourages them to take these incredibly risky gambles with the whole system.
Yes.
Now, if a government never bailed out the banks, you'd have to do something alternative. If one of the really big banks in Britain was to completely collapse, somebody would have to step in and save the small people who were involved with it. I don't mean the big investors and the big shareholders. I mean, if you've got 10 million people all have small amounts of savings, you'd have to think very carefully about what to do with that. But you could do it in a way where you are protecting small people without actually bailing out the banks and enriching shareholders and executives and so on.
Yes, and I guess the ideologically, the logical response in 2008, for example, would have been to have nationalised all the banks, not giving them a penny to bail them out, apart from the fact that you nationalise them, and therefore you take full control of everything from that moment on. But of course, when you have repeated neoliberal governments and politicians, that's almost, the Salem witch trials. It's not something that they would ever want to consider, apart from the way in which they then flood the banking system with the taxpayers' money, which in effect is a socialist policy, in order to bail out the casino capitalists, and yet then using the corporate media as a propaganda tool in order to convince most of the public that something else completely is going on and socialism is still evil. And they've done it successfully, to be fair.
Absolutely. So the propaganda around this has been incredibly successful. And I think that sort of point you're making about privatization and how it just cannot be discussed. The idea of privatizing the bank cannot be discussed. Yeah, in the mainstream media. So wherever we do see discussions of privatization, so when Jeremy Corbyn was running in the UK, where people were talking about I keep saying privatization when I mean nationalization.
Yeah.
So we talk about, let's say, water companies, we talk about energy companies, we talk about railways, but in fact, you never really hear in the mainstream anyone talking about the nationalization of the banking sector. And yet, of all the sectors you could look at, I would argue that the banking sector and perhaps the pharmaceutical sector would be the two that are most unfit for purpose at the moment and most in need of nationalization.
Yeah, and I guess that the sort of the motif that's come out over the last decade or so is it's the socialism for the few, and it's capitalism for the many, because we have the experience, the austerity. 90+% of people really experienced the austerity and the cuts and the ideological propaganda and the flooding of our consciousness with this idea that we should treat the economy like a household, which is all complete and utter garbage, as we've talked about in previous episodes. And yet, that repeating of the lie over and over again has definitely persuaded enough people to keep basically turkeys voting for Christmas. But can I just come back to just some key points that I've made along the way, if that's okay. In terms of the 2008, do you think that, because some people will put forward the proposition that actually there was a deliberate attempt to crash the economy, that you talk about it being something that went catastrophically wrong, but some people have argued that in order for the neoliberal project to work, occasionally you need these massive catastrophes so that these corrupt politicians with their ideologies can take control of a situation and be seen to be fixing it. But of course, they fix it for them. They don't fix it necessarily for us. So have you ever read or ever come across anything that there was an intentionality or some intentionality behind that occurrence?
So not that I recall. So what I noticed a lot is that I'm always coming across suggestions that certain things are deliberately planned and not what you might call the cock-up theory. And I obviously by teaching propaganda and looking at the way, let's say, the CIA overthrows foreign governments, I am well aware that lots of things are deliberately planned, but I haven't come across anything convincing that suggested to me that the 2008 financial crisis was. That's not to say it's impossible, because the more you research what does go on in government, you realize, nothing is impossible. It's a possibility, but I haven't really come across anything convincing.
I love the I love the phrase, but you use the phrase which I think we'll utilize as very much as part of the heading for this particular interview is Muppets to be ripped off. How cynical! How cynical!
Absolutely, it is awful, isn't it? And so the funny thing is, people think of con men and fraudsters as kind of a single guy on the street, but the idea that the whole mainstream banking system, which is fundamental to the operation of society and the economy and so on, is actually about conning people and deceiving them and mis-selling them and rigging markets and so on, is something that never really occurs to most people. But that is how banking insiders see it. They think that it is their right to do whatever they can to make profits, which ultimately will increase their own personal wealth, and they can do whatever it takes. And the idea that banking is meant to be a service to society, and which is kind of safe and stable, and that the people working within it are reasonable, ethical people who have our best interests at heart and clients' best interests at heart. To me, it is absolutely shocking that we have allowed this system to emerge at all.
Thank you. In terms of the way in which the economy has been handled in the last decade or so, what we have seen is interest rates being reduced to almost zero. Now, so that basically means that when we go and try to borrow money, the amount of money that we have to pay back on that loan is obviously a lot less than it would be if the interest rates are higher. However, on the other side of it, those people who have savings, etc., have seen those savings grow a lot slower and a lot less than they would have done. Can you just summarize what the effect of that is holistically and for us as a public?
Oh, I don't think I could give you a very good answer to that question. So my own view on mortgages is that it's actually good if they are at an incredibly low interest rate, and that ideally borrowers, that's the majority of people, should be able to borrow at very low cost. And if you have high interest rates and you work out sort of compound interest, the amount people repay is many, many times more than they borrow. So I think that's a very bad thing. So I'm all in favor of very low interest rates. I think you do have to be careful about what happens when you've got very low interest rates and the billionaires and the big companies start borrowing vast amounts of money and using it for gambling and speculative investments and so on. That then is very destabilizing. And then as far as savers are concerned, there is a sort of complex issue in relation to the return they get on their savings relative to interest rates, not interest rates, I'm sorry, inflation.
Yep.
And so if inflation is low, it doesn't matter too much that interest rates are low, so that the buying power of their money hasn't changed very much. But if inflation is high, then obviously the savings do get eroded over time, and that can cause problems for people who don't have huge amounts of savings and so on. And so I'm probably the wrong person to ask you about the sort of the overall impact of this. So it's one of these situations where, like a lot of things we discuss, it's actually incredibly complex.
Yeah.
And it often has all sorts of outcomes that people would not predict and unintended consequences and so on. So it would be much better to find other people who are more experienced in that type of analysis.
Thank you. Fantastic. You talked about the $20 trillion that's hidden in tax havens, and as you rightly say, we're always pointing, and the Guardian is just as much guilty as this as anybody. They're always pointing towards the Cayman Islands or Panama or some South American country, and yet you've identified the three countries that they rarely ever talk about, which is the Britain, the US, and Switzerland, as the 1, 2, and 3, whatever, all the culprits. I guess I'm just making that point, really, just basically to re-emphasize it. It's not necessarily a discussive point, but apart from the fact, yet again, the corporate media are sending us our consciousnesses somewhere else.
Yeah, so I think that's a point worth sort of reiterating, that like many of the other things that we talk about, Britain and America and other advanced nations cause a great deal of harm in the world, and yet the mainstream media completely buy into the idea that Britain and America are the good guys in world affairs and we don't do harm, we're trying to help the world and so on. And you can see very clearly when you look at tax havens and their role in helping powerful people in poor countries destabilize those countries by extracting wealth from them and so on, that actually our role in the world is very negative.
And I think we have to ask ourselves, is there a paucity of independent investigative journalists working in the corporate media, or is it an intentional? I mean, I'm not asking you to answer this question, or is it an intentional process by which they are deliberately pointing us to look somewhere else? Because if you're in and around news and information and you're reading all the time, surely there must be people who operate across the corporate media who are fully aware that Britain, the US, and Switzerland are the main culprits. So there must also be a reason why they're so reticent to do proper analysis repeatedly so that we get to understand that.
So it's always been my view that there is a deliberate attempt with all types of propaganda, but particularly in relation to explaining how the economic and financial system works, to make sure that the mainstream press don't criticize the ways in which the mainstream system works. And I think that is very deliberate. And it would be so easy for individual journalists to attempt to write differently, but I'm sure we've talked about this before, about the way the media operates, that they know that their articles wouldn't get published on the whole. If you look at The Guardian, they have done 1 or 2 excellent series in the last 5 or 6 years that have been critical of the system. So one has been critical of great wealth and billionaires and how that affects property markets and so on. And another has been a more general thing by a very good economist called Jason Cridland, who writes about the unfairness of the international system. So there are little kind of pockets of information that do seep into the mainstream, but in general, it's quite deliberate, in my opinion, to keep people unaware of how the system works.
Right, brilliant, thank you. I think I've covered everything, really, to be fair. I mean, what we've basically seen, to summarize, is international finance is run by international fraudsters who are supported by some very dark and sinister people who try to project this idea that actually they're trustworthy and we should vote for them, but they're the complete opposite. And finding solutions. I mean, you talked about, the idea with Richard Murphy that, you make some slight changes to the accounting system and we can make radical changes to the system. And you identified some key things that have happened historically where, the international markets and the international finances have changed quite radically in recent times. So I guess it's the idea really is to get the message out there that it can be done again, but it can be done for the benefit of us, as opposed to the benefit of just a small minority.
Absolutely. Yeah, I think, in fact, if we had the right politicians, if we had what they call political will, creating a fairer financial system would actually be quite straightforward. It's really not that hard to separate out banking and to introduce certain taxes and so on. And we've had a working system which worked for approximately 50 odd years, quite stably in the middle of the 20th century. And there's no reason why we couldn't return to a system like that. But at the moment, political will is completely lacking.
Absolutely. Thank you, Rod. Thank you so much. Another amazing
Thanks for
session.
having me on again.
Thank you. See you next week. You take care.
Yeah, see you next week. Cheers, everybody.